This is CGTN, China Global Television Network.
Hello and welcome to Global Business live from Nairobi. I am Peninah Karibe. Let's begin with a look at the markets. The JSE was subdued this afternoon amid cautious trade ahead of a busy week for local data. Markets are watching for a string of global economic data releases this week, while interest rate decisions are due from the US Federal Reserve on Wednesday and the Bank of England on Thursday. Local activity may be subdued from the shortened trading week, with markets closed on Wednesday for the Workers' Day public holiday. Coming up on the show tonight, Nigeria has grand plans to export gas across Europe. Boeing CEO cements his company's commitment to safety. And Egypt launches a number of trams imported from China and Ukraine. We begin in Nigeria, and the Nigerian National Petroleum Corporation intends to export natural gas to European countries through the proposed Nigeria-Morocco gas pipeline. This is aimed at linking the pipeline to the existing Maghreb-Europe gas pipeline in northern Morocco to supply gas from Nigeria to Europe. The group managing director says the closure of refineries in some European Union countries would favor Nigeria in the long run. This is due to the movement of refining operations to countries with high demands for petroleum products. He also added that the International Maritime Organization regulation reduces the cap on the sulfur content of bunker fuel from 3.5% to 0.5% as from 2020. Let's get more now from Deji Badmas, who's live for us in Lagos. Deji, Nigeria struggles to meet domestic gas demand. So why are authorities thinking about exporting gas to markets thousands of kilometers away through a pipeline that doesn't even exist yet?
That's a good question, Peninah. Yes, it's true the pipeline does not exist, but the hope is that it will exist, and that, planning is now at, I shouldn't say advanced stage, but then what we're told is that the front-end engineering design, the first phase of it has now been concluded, and that is why we're looking, those who are involved now are looking at constructing this pipeline. Now, the question is, does Nigeria indeed actually have a problem, a gas problem? In terms of meeting local demand, I would say no. You really have to understand the challenge of the gas sector in this country. It's not as if there isn't enough gas in this country. You have to look at the proven gas reserve of the country. Nigeria is has the largest gas reserve on the continent, the 9th largest in the world, about 187 trillion standard cubic feet of gas. That's what we've been told Nigeria actually has in reserves. Now, the problem we have in the country is not that of Nigeria, the gas producers now not being able to meet domestic demand. The problem is that of, you could say, is that of pricing. These producers have for long, I'm talking about gas producers and also gas distributors, have for long been campaigning for some kind of deregulation. What we have at the moment is that, yes, there's indeed a huge demand for domestic demand now, quite huge. But the problem is that the price is sort of pegged, if you like. Pegged at about $2.50 a million standard cubic feet. Now, that, according to these gas producers and gas distributors, that price is actually not cost reflective, and that is the reason why we're having this huge problem. Of course, the bulk of the gas, domestic gas now, goes to the power sector, but even in the power sector itself, you have so many generation companies that are owing these gas producers and suppliers. You have distribution companies not making enough money. Now, I'm talking about electricity distribution company not making enough money in terms of tariff now. So it's like everybody is owing everybody in that sector. And when you have a situation where everybody is owing everybody, then the producers will definitely not be able to produce, because already there is what is called the domestic, there's what you call in Nigeria now the gas aggregate company of Nigeria that is supposed to, aggregate gas suppliers in the country, and these gas suppliers have an obligation to produce and allocate certain amount of gas for domestic use, but the challenge is that these gas producers are complaining that the prices are not cost reflective, and the reason why they're looking at this export channel is just because they'll be able to make more profit, and of course their investment returns are guaranteed. Peninah?
Okay, so Deji, you're saying gas production or supply in Nigeria is not a problem. But let's talk about this. Just last week, 4 power stations were out of commission because of a leak on a gas pipeline.
Gas
on
production.
The 25th,
gas production.
Gas production. Okay, good. So about 2 gigawatts of generation capacity was offline because there was no gas available. Let's talk about the domestic market. Why hasn't Nigeria been able to sort out its domestic supply problems?
Yeah, it ties down to what I just said earlier. The issue of, look, the Nigerian government has basically, just like you have with petrol subsidy, I mean petroleum sector that is regulated, what you have in the gas sector is a regulated regime. As a producer, take for instance, if I was a producer of gas, it would definitely cost me some amount of money to produce this gas. And now I'm being asked to sell the gas at a particular price, not beyond $2.50 per, million standard cubic feet. Now, for me, I am saying that is not cost reflective. I mean, these gas companies are saying it is not cost reflective. They would not be able to make returns on their investment. And that regulatory regime is also preventing investment in the gas sector. So what we have at the moment, and that's the reason why the Nigerian government has not been able to sort it out, basically it is highly regulated. If you deregulate that sector, then you're going to have more investment. But the problem is that the end consumers, would they be able to afford it? And that is what the government is really concerned about. The government is concerned because, look, the bulk of the domestic gas is consumed by this electricity company. And then electricity tariffs are sort of regulated in this country. I mean, electricity companies are not actually allowed to charge what you call cost reflective tariff. So when you have that kind of situation, this is what you're going to get. And that is why you're having a situation where, as we speak today, because these generation companies, I'm talking about electricity generation companies now, are owing the gas producers and gas distributors, and because they're not getting enough returns from the distribution companies, basically the gas producers are sort of reluctant to continue to, pump gas to these generating companies or continue to supply gas to for domestic use now when they're not getting any returns at all. I mean, enough returns now in terms of investment. So they're basically looking at the export market, and everybody understands that the future of Africa is gas. Nigeria has got enormous amount of gas, and do not forget the Nigeria-Morocco gas pipeline project is not just between Nigeria and Morocco. You have about 13 countries that are involved. This gas pipeline is going to pass through about 15 countries. So, and you know that we're beginning to have new gas discoveries in some countries like Senegal, Mozambique, Mauritania, and all of that. So they're all going to be part of the process. Ghana is going to be part of it. Of course, a lot of work would still needs to be done. So this is not just about Nigeria. And, for those who are involved in this, they think that's the best way, that's the way to go, because gas is actually the future of the energy sector. As you know, the world is actually moving away from fossil fuel. They're looking for cleaner energy, concentrating on gas. Nigeria has got enough of gas reserves, and that is why Nigeria is trying to tap, to key into this and eventually penetrate the European market. So
Deji, assuming Nigeria does export the natural gas to Europe, how would it do it? I mean, what would the pipeline to move it to north across the Sahara coast, and who would pay for that bill?
Very good. Now, we do not know how much it will cost. What we know is that we understand those who are involved are actually looking for around $2 billion to set up an energy finance corporation that will fund this. We do not know how much it will cost, but I would suppose that this cost now will be shared among the countries involved. Of course, Nigeria and Morocco are the key players, but as I said, this gas pipeline will pass through 15 or 13 countries. We're talking about a gas pipeline that will span about over 5,000 kilometers, I mean, before it links up to the gas pipeline in Morocco now. So I would expect that all these countries involved, I mean, this country is that the gas, because what we understand is that you're going to have intake and offtake points at various countries that this gas pipeline will pass through. So where you have the intake points, it means if you have an intake point, for instance, in a country, say, like Benin Republic or Ghana, it means Ghana will be pumping in gas into that pipeline. So, and then if you have offtake points, it means if you have offtake points, for instance, in a country like Mauritania, it means Mauritania would be using part of that gas and they would be paying for it. So I think the details have not been spelled out yet, but there's just there's no doubt that the countries involved will have to bear the cost. But of course, the bulk of it, I would suppose, would be borne by Nigeria and Morocco because they are actually the initiators of this project. It's a viable one, to be candid, Peninah. It's actually a viable one. And if they're able to do this, then I think everyone would benefit from it. The entire continent would benefit from it, especially the West African sub-region. But the fact is that this is going to take a very long time. Think of the West African gas pipeline. It took about 12 years from conception to delivery. And there's this estimation that this might possibly take 25 years because you have a number of countries involved. A lot of things are involved. I mean, you still have to, all of them would have to sign up to the agreement. A lot of things would be involved, the technical, commercial side of things. It will take a long time to sort all of that out before we begin to see in concrete terms those pipelines laid across the Sahara Desert and, of course, across the seas of the continent to get to Morocco and eventually enter Europe.
It certainly needs a lot of political goodwill, Deji. Thank you very much for that update. Deji Badmas live in Lagos. Still in Nigeria, the country is turning to Saudi Arabia to help revamp its oil refineries and end an era of refined petrol import, which is costing the country hundreds of millions of dollars every year in subsidy. Nigeria's oil minister and the president of Saudi Aramco have discussed investment options in the mid and downstream sector. Aramco is expanding downstream operations such as refining and petrochemicals production as part of its drive to become the world's largest integrated energy firm. Here's CGTN's Deji Badmas once more with the details.
For well over a decade, Nigeria has been struggling to revamp its 4 oil refineries and get them to at least produce to meet local consumption. All 4 refineries are estimated to have a combined refining capacity of 445,000 barrels per day. But for about 2 decades now, they have struggled to meet even half of that refining capacity. To make up for the shortfall, the country relies on imports of refined petrol, which it in turn sells at subsidized price locally. With subsidy payments now spiraling out of control, the government is desperate to get the refineries working again. Oil Minister Ibe Kachuku says that would cost around $2.5 billion and is quoting Saudi Aramco to step in.
We're not really doing well as far as the Nigerian downstream sector or refining capacity is concerned. So Saudi Arabia coming in is going to be good for her credentials. Then for us as Nigerians, we are also going to be grateful and will be happy with that fraternity that exists between Saudi Aramco and NNPC, you know, in this case, the Nigerian part. Then practically, depending on the kind of investment that is going to take place, I will expect a mutually win-win situation.
Officials of Nigeria Petroleum Ministry have now confirmed that both countries will draft an MOU that could see Saudi Aramco invest in revamping the oil refineries, build a brand new one, invest in Nigeria's liquefied natural gas, and trade in crude and refined products.
If Saudi Aramco or Saudi Arabia intends to establish a refinery in Nigeria. That will also be good. At least we won't be talking about landing costs, this cost, that cost. We will basically be getting the crude oil from wellheads from oil wells in Nigeria, ship them either through trains and wagons or through pipelines to respective refineries within Nigeria. We are likely to refine them in Nigeria, distribute them in Nigeria, and probably sell them in Nigerian currency called the Naira, and that on its own will help us to conserve foreign exchange.
Nigeria's domestic consumption of refined petrol is put at around 40 million litres per day. For now, the government imports about 90% of that at international price. It's a drain on the country's foreign exchange. So if it's able to get those refineries working at optimal capacity with this new MOU with Saudi Arabia, then it would have been able to get the country out of a dark hole in which it's been stuck for a very, very long time now. Deji Badmos, CGTN, Lagos, Nigeria.
Let's look at your corporate news now. And Swiss multinational investment bank Credit Suisse has been slapped with a criminal complaint over alleged fraud in the arrangement of $2 billion of loans to Mozambique. Mozambique admitted to billions of dollars of undisclosed borrowing, sparking a debt crisis in 2016. The crisis saw the arrest of government officials and international bankers in the United States, United Kingdom, and South Africa. Kenya's leading telecoms firm, Safaricom, her chief executive Bob Collymore plans to step down in August for health reasons. His replacement is yet to be announced by the Kenyan government. Collymore is noted to have helped build Safaricom into East Africa's most profitable company, thanks to the popular mobile money transfer service M-Pesa and a growing customer base. Our telecommunications giant MTN in Ghana grew earnings by more than a third in the 3 months to end March. Earnings before interest, tax, depreciation and amortization rose to 38.6%. Active data subscriber numbers more than doubled to 14.3 million, and the number of mobile money users rose to 9.9 million. And China's ambassador in London says the UK should make independent decisions about whether to let Huawei help build its 5G network. His remarks come after the US, Australia and New Zealand accused the Chinese firm of being a security risk because of its alleged ties to the Chinese state. Last week, the UK agreed to allow Huawei limited access to help build Britain's new 5G network amid those warnings. And that's a look at your corporate news. This is Global Business. Still ahead. We begin our special coverage ahead of South Africa's upcoming elections. Tonight's focus is powering South Africa as well as investments in the country.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
On May 8th, 27 million South Africans go to the polls. Africa's most industrialized nation is just emerging from recession and still faces enormous economic challenges. Join us on Global Business Africa for a week of in-depth coverage and analysis on the state of the country's economy. A different perspective of events shaping South Africa.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? and why.
Let's get some reaction on ground. Joining us in Johannesburg is Sumitra Naidu. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business. Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Let's head to Johannesburg for a special coverage on the upcoming elections, and this year's polls are taking place at a time when South Africa's economy is under severe pressure. My colleague Uche Okoronkona joins me from the Nelson Mandela Square. Uche, what are some of the key issues weighing heavy on South Africans' minds as this election draws nearer?
Well, thank you so much, Peninah. And of course, as you said it, a lot of issues weighing heavy on South Africa's people. And the reality is South Africa is currently an economy in crisis with persistent low growth. We actually saw the IMF revising down its growth forecast for the country from about 1.4% to from about 1.4% to 1.2% in 2019, of course, making it one of the poorest performing economies in sub-Saharan Africa. Now, the country is facing record low unemployment levels, which of course is making it quite hard for South Africans in terms of their daily living. Fuel price hikes. We're seeing the cost of high costs of household items, high costs of food prices going forward. And now, in the midst of all this, of course, the country is facing one of the worst power crises that it has seen ever. Now, behind, of course, power utility Eskom's problems are a number of issues. One of them, an aging fleet of coal-fired power stations, massive delays in the completion of its two newest power stations, and of course, topping the list, poor management of Eskom as a company. Now, today the firm is rationing power, just barely surviving on a government bailout, as of course it struggles to supply electricity in the country and pay off those massive debts that it owes banks. And here's Angelo Coppola basically breaking down the issues for us.
The current instability at Eskom isn't good news for heavy users of electricity like the steel sector.
You find that non-supply of electricity and increasing cost of electricity is becoming a problem to the subsectors, because ferrochrome is a very important product that is being used to manufacture stainless steel, and stainless steel is a very important intermediary input that's being used to manufacture cars. So you've got this positive, negative knock-on effect and leading to increase in production cost.
The mining sector, on the other hand, is looking for its own solutions from renewable energy and topping that up with a mix of hybrids, diesel and fuel cells. It's a move away from Eskom and an attempt to lighten the fiscal load involved in bailing out the ailing utility.
I think the mining industry has come together and said, listen, we will deliver our own solutions. We'll pay for our own solutions. It doesn't have to come out of the national pocket. It doesn't have to come out of Treasury. And it doesn't have to cost everybody a massive power increase at every home user to get power into businesses again. What we need is to break the bureaucracy. We've got to cut the red tape and let industry solve the problem.
If solutions aren't found quickly, businesses will close and thousands of jobs will be lost. The mining sector estimates that it could lose more than 100,000 jobs if something isn't done. The potential fallout in the metals sector is as concerning.
The subcomponents within our cluster, including the ferrochrome, they spend about 3% of the electricity cost expenditures, about 3%. But if we were to look at the rand value of that, it's about 14 billion rand, which is a significant amount, and it tends to eat into the margins of businesses.
The problem, say economists, isn't the big players that can afford the tens and hundreds of millions needed to build their own power stations.
Our concern is for the small and medium enterprises. We have about over 60% to 65% of our businesses that are classified as small or medium enterprises. So our concern is that these businesses are going to close down, and there's a direct correlation between these businesses and employment that they offer. So we're very worried that the official unemployment rate of 27.1% is going to increase.
Business users and small consumers don't really worry themselves about whether the utility is solvent or not. They simply want electricity at an affordable price, and they're not getting that right now. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Now, of course, as we mentioned, South Africans will be heading to the polls on the 8th of May in the country's 6th democratic elections. Now, if you look at the picture that is painted right now, the economy is struggling, unemployment rising, poverty on the rise as well. Adding to that, as we mentioned, South Africa's biggest challenge at the moment, which is power supply. All of this impacting heavily on investments in the country. Here's Sumitra Naidu breaking that down for us.
It's been a struggle. He took over an economy that went into recession. Growth in 2018 came in at just 0.8%, but Cyril Ramaphosa is determined.
I think he has already done a lot with the limited mandate that he has, bearing in mind that the elective conference was only recent. He's also duty bound to stick to the resolutions of that conference, and he was only serving out a term that didn't belong to him.
Investors too seem to be warming up, confident Ramaphosa can move the country in the right direction. Proudly South African company Brick has just announced a massive new expansion project that will create close to 1,000 downstream jobs.
So at the moment we're on an investment drive of just over $100 million US dollars in various aspects of our processes. Part of that 1.2 billion investment is investment in a brand new factory that will cost us roughly $80 million. And that factory will then produce product. It will produce 100 million brick a year.
Brick has been operating for 117 years. It's had its challenges, but it's still confident in this economy. In fact, its latest investment is because the company believes that South Africa is poised for an economic recovery.
We have a lot of confidence in South Africa. We've been through many trials and tribulations throughout the political history of South Africa, and thankfully a lot of the bad times are past us. And at the moment there's no doubt that we're going through a particularly tough time, but we also know that these things do recover.
Ramaphosa says companies have already committed $20 billion. Some experts believe Ramaphosa will gain more traction after the election.
If he as president is able to increase the vote from the 53% that was achieved by Jacob Zuma, say, to 62, even 65% on the high side, he would be able to do a lot more. The investment that we already attracted and the promised investment that is already starting to come into South Africa, I think everyone is just waiting for the elections, and we should begin to creep up in terms of the growth rate.
Sumitra Naidu, CGTN, Johannesburg, South Africa.
Well, let's talk a little bit more about what next for Eskom as a company. Now, Eskom's situation is a result of years of mismanagement, poor prioritizing of investments in the firm. This, of course, is according to a government probe that took place. President Ramaphosa has now appointed a new team to manage the utility and certainly turn it around. Now, earlier on, I spoke to Ted Blom, who's a mining and energy expert, as well as Dr. Tanti Mtanti, who's a senior lecturer at Wits Business School, to break down the issues behind Eskom and what is the way forward.
The money that the government advanced was under the emergency funding requirements. So you can only press that button if it's an emergency. So for the minister now to say it wasn't an emergency means that somebody's lied to the fiscus. And I don't believe that that is appropriate. So to the extent that it is emergency funding, it means that Eskom is in a very precarious situation. And in fact, I forecast earlier on in the year that by the end of March, Eskom will have its back to the wall and needs to go into business rescue. If I may just briefly say, I think that the CRO, the Chief Reorganization Officer that they've now appointed, which is a new term, I think is nothing other than a business rescue practitioner in disguise.
And of course, it's been about 26 days of load shedding. But what we hear is more recently, the situation seems to have been improved. South Africans are seeing power. So what do you think is behind that seeming sort of restoration in power in South Africa?
In my view, what you are seeing at Eskom is a financial crisis mutating into an operational crisis, because Eskom is not properly funded. The operations are no longer being properly run. They're losing quite a bit of money, and obviously they've got a pretty high cash burn rate. I think they're burning through about 6 billion odd. And with the resolution of the power crisis, hopefully they're not just burning more money through buying more diesel. And I think the government so far, in fact for the last 10 years, since Eskom started its build program, they've been drip feeding it with funds. They've never really actually properly funded it. And it's just created a massive, massive problem. Together with the corruption and the inefficiencies, it's created a massive, massive problem.
Right. Well, looking at this situation, how do you feel then about the outlook for Eskom, financially especially? Now, ratings companies, they say that one of the biggest risks to the country going forward is helping Eskom pay off this debt. At the same time, experts are also saying that Eskom, it doesn't expect to be able to generate enough internal cash in order to meet its obligations in the next 5 years. How does that make you feel about the outlook of the company?
My take is very simple, that if Eskom is cleaned up, as the good doctor has just indicated it needs to do, and which the board has promised by September last year that they would have a turnaround plan, if they clean it up on the coal side, it will save them 40 billion a year. On the human resources side, it will save them roughly 31 billion a year. On the corrupt IPP process, it will save them roughly 34 billion this year, 50 billion next year, and 80 billion in year 3. If that is sorted out, then Eskom has got more than 100 billion rand a year in free cash flow. If the debt that's standing at 400 and I think closer to 500 billion than 419, because they've now borrowed 3 tranches or 4 tranches of extra cash. But if that is halved, because that's the extent to which the assets have been overvalued, if that is halved, then you can repay that debt within 3 to 4 years, which is an exceptionally short time for long-term assets. Eskom has not got a financial problem. Eskom's got a management problem. That's the
And do you agree with that it's more management than it is financial?
I doubt whether it's financial or management. I think it's much deeper. I think the problems with Eskom are not really rocket science. You've got a bunch of political interests that wants to, in a way, privatize the money for themselves from Eskom. So a lot of the political interests are hugely conflicted. A lot of the senior management is hugely conflicted. Eskom signs some of the most ridiculous agreements anybody would sign. They buy coal from double or 3 times the price from one mine compared to another. They pay for IPP power at 3 or 4 or 5 times the going rate. Political interests are involved in that. It's literally being looted, and the scale of it, contrary to what people expected, the scale of the private interests and them trying to defend their turf with the change in government from Zuma to Ramaphosa has just seemingly increased, and more of the decisions are increasingly irrational.
Well, then I am curious then what your thoughts are on the government's turnaround strategy for Eskom in 2019. There's a new management team that was put in place, and of course they mentioned possibly splitting the entity into 3 different parts. What are your thoughts on those ideas they have, and what are the possible solutions you both feel that they should be employing going forward?
Okay, if I may go first. Well, firstly, they haven't tabled the turnaround plan. They've put through a muddled unbundling strategy, which I have not seen, and I don't know if anybody has seen a document quantifying the effect and the impact of that. You can't unbundle a $1 billion entity and not have a strategy document with milestones and yardsticks and tick boxes and stuff. I mean, what's going on here? So the government had initially the board that was supposed to do the turnaround. They delivered nothing. 12 months or 14 months later, they haven't delivered anything. Then they appointed the 8 wise men, okay, of which 2 resigned. And they came up with the unbundling strategy. over Christmas. But there's nothing to prove it or no numbers to support what they say.
And Doctor, are you skeptical?
Yeah, maybe perhaps more so, not so much on the operational side, but on the actual strategic and more political side, which obviously has a huge impact on the financial bearing. I think largely the decisions, number one, to sign IPP contracts, the round 4 ones, they were very questionable. Number two, the decision to unbundle Eskom itself is very questionable. It seems mainly structured to serve IPP interests, right? So that they can sign directly with the systems operator, right? And you leave Eskom generation out, perhaps it becomes, as they call it, a bad bank to shut it down or to reduce it. Now, if I'm a creditor, I'd want to know where will my debt sit? Will it sit with generation? Will it sit with transmission? Will it sit with the systems operator? And if that one is a bad asset, what happens to my debt? My view is it seems the major overriding imperative of decisions over the last 18 months or so has been to protect IPP interests, not to protect the country, not to save Eskom, not to ensure reliable supply for the country, but to protect IPP interests. And unfortunately, politicians from the president down are conflicted. They have investments and interest in IPPs. And decisions at Eskom purely seem to be based on protecting their interests.
Now, of course, our special coverage continues from here in South Africa. Tomorrow, we will be looking at that $100 billion investment pledge by President Cyril Ramaphosa. We'll be looking at how much has been raised so far, and certainly what are the prospects in terms of meeting that target. Do stay tuned.
And we'll certainly check in with Uche and the team in Johannesburg tomorrow. Boeing Chief Executive Dennis Muilenburg has tried to bolster shareholder confidence in the company. He says the company is committed to ensuring unwavering safety. His comments come after his first general meeting since 2 fatal crashes of the 737 MAX triggered the jet's grounding, lawsuits and investigations. The company's stock has lost 10% of its value after the March 10th crash of an Ethiopian Airlines jet, while earnings fell 21% in the first quarter.
We know that in both accidents, there was a chain of events that occurred. One of the links in that chain was the activation of the MCAS system because of erroneous angle of attack data. That was a common link in both accidents. We know that we can break that link in the chain. That is a link that we own. It's our responsibility to eliminate that risk, and the software update does exactly that.
Let's go to Daniel Wrenches in Washington for more details of that meeting. Daniel, this meeting with the shareholders comes at a time they have filed a lawsuit accusing the company of defrauding them by concealing safety deficiencies in the plane. What's the company's defense against those claims?
Yeah, I think there's the general sense of this is that the shareholders feel that following the first crash involving the 737 MAX, Boeing should have been able to identify some of the technical problems and then reveal them, and that in the interim, shareholders did lose value as a result of this lack of disclosure. But this is likely to be a years-long investigation case. And what happens typically in the early stages of such a civil lawsuit is that the people seeking some compensation will ask for very high levels of penetration into information internal to the company called discovery. The kinds of information, the facts that may be available for a case in the future. So they're fighting over the sort of framework terms of the case and what kind of penetration of information they could take in the form of documents. At this stage, Boeing has been asked by me to provide a statement, but they haven't done so.
what about Mullenberg, Boeing's chairman and CEO? He's facing calls to strip him of one of those titles at today's meeting. Is his job on the line?
Well, the argument that was made before the shareholder meeting by a particular shareholder information research group was that if you have the chief executive, the person running the company, who's also the person overseeing the company as chairman, then there's kind of a concentration of power and also somewhat of a conflict of interest. But shareholders over the period in which Mullenberg has been CEO since 2015 have seen almost a fourfold increase in the share value of the company. So he's built up a lot of support over those few years. And at the moment, I think people take the view that he is a former aircraft engineer. He has a good understanding of the details about this investigation, and they've decided that he is the man to sort of crisis manage this. As to his long-term viability, I think that depends on his performance moving forward.
And Daniel, there are reports that the FAA could clear Boeing, the 737 MAX jet, to fly either in late May or the first part of June. But given the hasty approval process for this plane, how can airlines be convinced that Boeing and the FAA haven't cut any corners here?
Well, there's intense scrutiny on the role of the FAA, the regulator, and whether, in fact, its regulation in the past has been inadequate to the power and size of the Boeing engineering staff, and that they've basically ceded a lot of responsibilities to Boeing. So I think the FAA will be working very hard to show that it is a credible organization, because it has been challenged, as has Boeing. I think the basic fact of the matter here is the work that Boeing is doing to improve its relationship with its airline customers and with individual pilots, to provide them with initially some simulations of the new fixes that they've made, to allow the airlines to see the kinds of changes they've made, improve their customer service. And then fundamentally, they have a huge challenge with the flying public that has yet to be determined about whether the flying public itself would be willing to get on these aircraft, and the airlines themselves will be looking at the response of the flying public. So I think Boeing has to do a much better job of managing its public relations and its communication. And Mullenberg's press conference today was rather unconvincing, so there's still a question mark about Boeing's response to this.
All right, Daniel, thank you for that update. Daniel Branches live in Washington. Now, many parts of the world are going cashless. A growing number of businesses say they prefer the efficiency and safety of mobile transactions. But in the United States, some cities are pushing back, saying cashless stores unintentionally discriminate. Philadelphia has taken the lead in this backlash. CGTN's Peninah Karibe tells us more.
Philadelphia, like many U.S. cities, has stores that don't accept cash. Fast casual restaurant chain Sweet Green is an example. It's part of a global trend that is growing. Many businesses say cashless stores make transactions faster and safer.
But as of July 1st, Sweet Green and most of Philadelphia's other restaurants and stores will have to let customers pay with legal tender. If not, they could face a fine of up to $2,000.
That's because Philadelphia just became the first major U.S. city in recent history to ban cashless establishments. City Councilman Bill Greenlee co-sponsored the bill.
I think it's a form of discrimination, because some people don't have the same access to buy a basic product that others do.
The mayor's office says 26% of Philadelphia residents live below the poverty line. Some, mainly minorities and immigrants, don't have bank accounts and don't have access to credit. The ban comes as Amazon Go, a cashless store chain, expressed interest in opening a branch in Philadelphia. Amid mounting criticism from opponents, Amazon Go has reportedly reversed course and decided to accept cash at its stores. Amazon may have caved to pressure, but Sylvie Gallier-Howard is concerned the ban sends an anti-business message.
If lots of businesses are moving to this model and decide we're going to close,
we're not going to open more, that becomes a concern because then we start to lose jobs.
I would say, what message are we sending that somebody can't go in and get a cup of coffee because they don't have a credit card? I think that's a worse message.
Both do agree on one thing: the ban is meant to be temporary.
The mayor hopes that this bill is a pause while we deal with the issue of access for the underbanked and the unbanked to this business model.
As the rest of the world marches towards cashless stores, other U.S. cities, including New York and San Francisco, are considering similar bans. Peninah Karibe, CGTN, Philadelphia.
Japan is currently on a 10-day holiday to celebrate the enthronement of the country's Crown Prince Naruhito. Its stock market is closed and won't open until May 7th. The 10-day stretch wipes out 6 trading sessions and is the longest market closure since the end of World War II.
Breweries, hotels, retailers, restaurants, and train operators are all expected to benefit from the holiday, which runs from April the 27th to May the 6th. Banks, schools, government offices, and many businesses will be closed. A record 24.7 million people, about 1/5 of the country's population, are expected to travel, according to travel agency JDB Corporation, mostly within the country. Of international destinations, Hawaii is one of the most popular. The scale of overseas tour reservation tripled that of last year. Travel-related consumption is expected to be 1.48 trillion yen, or 88.8 billion yuan. But not all are happy with a long vacation.
I'm working in the services sector, and I can only rest for 3 days.
I'm sick with my throat. I have to rush to the hospital for some medicine. But during the holiday, I have to call the emergency center. It's the only place we can seek medical care.
Stock agencies are adjusting their trading positions to manage risks during the 10-day break. Some analysts say large consumption volume during the holiday might lead to sluggish post-holiday consumption, and manufacturing hold of big companies like Toyota or Hitachi will also lead to a decrease of 0.4% of Japan's GDP. Song Yao-Tian, CGTN.
Thailand has launched a massive project to promote the use of renewable energy by building the world's biggest network of floating solar farms. The ambitious project will see thousands of solar panels placed on water at reservoirs. CGTN's Martin Lowe has more.
Taking heat from the sun to produce electricity seems like a dream solution, but solar panels take up vast areas of land, which has been a major disadvantage. Now a new approach is being pioneered, siting them on water. Engineers say it saves valuable space, and the water's cooling effect makes solar cells more efficient and longer lasting. These two factors convinced Thailand's State Electricity Authority to draw up ambitious plans to construct 16 floating solar farms at 9 hydropower reservoirs, making a major contribution to future power needs. Research is taking place at this testbed at Rayong, 170 kilometers from the capital, Bangkok.
Thailand, we have a strong commitment for the CO2 issue, and putting more renewable energy in Thailand is a government policy. To put big, massive solar farm on the fertile land for agricultural industry doesn't make sense. And by having a lot of standing water like the reservoir that it gets managed, I think it's a win-win situation.
The designers say constructing solar farms at existing hydro schemes will double electricity production. When conditions limit solar generation, hydropower can take over. Thailand currently produces around 12% of its energy from renewable sources, but it plans to increase that to 37%, more than a third of total capacity within 20 years. And floating solar will make a significant contribution. Thailand will begin by building a $63 million solar farm at the Sirindorn Dam in Ubon Ratchathani. The full network is scheduled to be constructed over the next 2 decades. 8 of the planned solar farms will each be bigger than the world's current largest at a collapsed coal mine in China. Meanwhile, the island state of Singapore, where land is extremely limited, is developing a floating solar system in the sea off its coast. Elsewhere in Asia, China, India, Japan and South Korea are among those pursuing floating solar technology. Martin Low, CGTN, Rayong, Thailand.
Let's now look at the commodities market, and oil prices fell today, extending a slump from Friday that ended weeks of rallying after President Donald Trump demanded that OPEC raise output to soften the impact of U.S. sanctions against Iran. Trump said on Friday that he told OPEC to lower oil prices. Gold, on the other hand, steadied, trading near a more than 1 week high, touched in the previous session on increased bets that the U.S. Federal Reserve might cut interest rates in 2019 after recent data showed inflationary weakness. You're watching Global Business, still ahead. Egypt launches a number of trams imported from China and Ukraine. And China donates medical equipment to give Kenyans access to quality health care.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
Egypt has inaugurated a number of new trams in the coastal city of Alexandria. They were imported from China and Ukraine. The 15 trams, at a cost of $18 million, are meant to improve the public transportation that has been run down in the North African country. CGTN's Yasser Hakim has more.
The tram service has been in Egypt for decades, but the new carts are considered an upgrade of the outdated ones, providing a better public transportation service.
The tram in Alexandria covers 46 kilometers with 162 tram carts. We are targeting to cover 100 kilometers with the eco-friendly tram. It has high safety measures that weren't available before. Like doors don't open while the tram is moving, and this reduces the rate of accidents. For the first time, it's equipped with an AC and Wi-Fi, as well as it is more quiet and has high-quality braking system.
The first city to receive the new tram is Alexandria, and the passengers have felt the difference.
It's my first time on the new tram. It's so comfortable and calm here, and even the music is relaxing. I'm enjoying the experience.
It's really nice. Alexandria was in need of such service. It's much better than before. It's clean and fast. We are happy with it.
Even the workers on the tram are commending the new addition to the service.
Driving this tram is different. There are more safety measures for the driver and passengers. There's a digital screen to notify me if the doors are open or any malfunction. It's much easier and comfortable to drive. In the old one, I used both legs and hands. Here, only my hands.
Egypt had imported 15 tram carts from China and Ukraine as a testing period.
It's the best form of transportation inside the city. It's eco-friendly, carries the highest number of passengers compared to other forms of transportation, the cheapest tickets and the lowest cost to operate. It has the longest lifespan, 25 years, while other transportations have an average of 10 years lifespan.
The new electric tram also has the ability to operate for over 1.5 kilometers if there's an electricity blackout. What we're seeing here is a comprehensive plan to overhaul the transportation system. Besides the electric tram, Futong Company from China has signed an agreement to produce 2,000 electric buses in Egypt starting 2020. Yes, Hakim for CGTN, Cairo.
Here in Kenya, a unique partnership between the country and Chinese medical companies has allowed thousands of Kenyans access quality and affordable treatment. Prior to the arrival of these machines, most Kenyans often sought advanced medical treatment abroad. Here's more on that story.
The Thika Level 5 hospital is situated around 50 kilometers outside the capital, Nairobi. It is a busy facility owing to its location along the busy highway that links Nairobi to the Mount Kenya region. For doctors and medical staff operating here, the arrival of Chinese medical equipment has changed the way they deal with medical cases.
It is one of the best modalities we have in diagnosis. One, the image acquisition time is short. So the turnaround time for patients management is short. So that makes it one of the best modalities, especially when you are in emergency situations. You are coming from an accident scene, you go through an MRI, you go through the CT scan, we are able to make a diagnosis and the surgeons are able to go to theater within the shortest time possible. So because our location, we have very many highways around us, so we get a lot of accidents around, and the CT scan has helped us to make quick diagnosis that also make the surgeons in the theaters operate very fast.
Through a partnership between the Kenyan and Chinese governments, Chinese companies have been supplying and installing machines such as CT scanners and other imaging equipment in hospitals run by the Kenyan national and county governments.
I think the CT scan program is something that is relatively new in our country. So most of the radiographers in most of the counties had never seen and had never operated a CT scan machine. So it was important that as the program is rolled out in the other counties, they must be trained on how to handle the machine, patient safety.
China Newsoft Medical Corporation is one such example. The company installed modern high-end equipment to Kenyan hospitals. It also provided a one-stop integrated solution for image clouding. To ensure sustainability, the company also trained local medical staff in service delivery and clinical application in over 37 counties in Kenya.
For this case, this patient was involved in a road accident, and this machine has helped us acquire these images. On this image, you can see there's a bleed. The black lines there, those are bleed, which can help us. We've diagnosed it with a chronic bleed, such that the patient can be taken, any action that should be taken, like he can be taken to theater.
This program is aimed at enabling Kenyan medical personnel attend to and manage over 76% of treatable medical cases. Currently, some Kenyans opt to seek treatment in foreign nations, which is a top-dollar undertaking. Universal healthcare is one of the 4 pillars of the Kenyan government's goals. China has become a medical partner with Kenya for decades, and this is one of the partnerships that makes ties between the two nations not just strong, but also healthy. Laura Walubengo, CGTN.
Let's look at the currencies now. And the South African rand was firmer today, outperforming its emerging market peers and holding on to gains despite mixed global economic data. And here in East Africa, the Ugandan shilling traded stable amid subdued activity as both merchandise importers and players in the interbank market stayed on the market sidelines. And with that, we come to the end of Global Business tonight. We welcome your feedback. Send it to the contacts on the screen and follow us on our digital media platform. I'm Peninah Karibe. Thank you for watching.